much, and apologies for running late. Bank of Ghana was doing another amazing session, masterclass on fintech regulation. So thank you for waiting for us. It's a pleasure to be here with you. Director Oppong, thank you so much for coming to the stage, and Viv from HBAR Foundation. I have the opportunity to work with both of you in my capacity, but today we'll be talking more broadly about a topic that I think a lot of people have interest in, not only in Ghana, broadly in Africa, given the dynamic that we're seeing in the continent. And Ghana, in a way, is leading their story and how you think about the space. But looking forward to a great conversation around CBDC, stablecoin, and crypto. So that said, if maybe we'll start with something more general. Do you want to take a pass at explaining what is CBDC, stablecoin, and crypto in general? Start with you.
Thank you very much. And again, let me also apologize for the delayed start. First of all, CBDC is not crypto. Let me clarify that. But I think most people in this room are familiar with cryptocurrencies being a very interesting creation. And I think since its introduction, we've seen such an innovation just from the variations, the variety of use cases that it presents. But it's really a representation, a digital representation of value that can be exchanged one way or the other. But stable coins, we look at a bit more interestingly, because I think generally from a regulatory standpoint, stablecoin appears to address the potential volatilities associated with the traditional cryptocurrencies. Of course, unfortunately, we've seen some challenges with the algorithmic type. But then you also have central bank digital currencies. Now, I want to distinguish between these two categories, so the stablecoins and the cryptos and the CBDCs. Central bank digital currencies are actual currencies. Stablecoins from a legal standpoint, stablecoins and cryptocurrencies are more virtual assets and digital assets, because currency has to be issued by a state-mandated institution. And so in Ghana, the CD can only be provided by the central bank. So CBDCs are really a dematerialized version of your notes and coins, the existing currency in place. So I think from a simple definition standpoint, distinguishing traditional crypto from CBDCs, you can think of it that way. Just a dematerialized version of it. And it's a liability of the central bank. It's a medium of exchange, obviously, and it has the full backing of the state institution that is mandated to provide currency in that market. So hopefully that sets the tone for the conversation today.
Sure. Viv, do you want to jump in, kind of clearing from an industry perspective, anything to add to that?
Sure, thanks. So I guess I would probably approach explaining this more from the properties of each of them and also the timeline at which they all sort of appeared. So if you think about cryptocurrency and the initial versions of it, you start with Bitcoin. So I think one of the things that has enabled all three, being cryptocurrency, stablecoins, and CBDCs, is this notion of the verifiable chain. So this could be blockchain like Bitcoin, or it could be any other DLT and what have you. But I guess from a properties perspective, if you think about cryptocurrency, it's decentralized, it's peer-to-peer, and on top of that, transactions happen on the network, verified by the network. Now, in order to bring a sense of distributed governance, this is where you have things like mining, which is basically artificial problems that are introduced to bring some degree of difficulty to the network. Now, why is this done? Because it brings security and governance in a decentralized way. But the cons of this are environmental impact, and as well as that, it makes it inherently expensive. And on top of that, you're doing work for no good reason, which, in any well-functioning, self-regulating economy probably shouldn't be happening. And then it does have its benefits, though, because it does allow access. Well, not so much now, but in the early days, it allowed access. Anyone could go and buy Bitcoin for, literally cents on the dollar, and you could then use this to transact in a way that was meaningful. So there was a notion of utility, which I think always needs to be front and center. And the other beauty of it is, because all transactions happened on network, verified by the network, it gave you full, information symmetry. There was full price discovery, which meant that the price was driven by demand and supply. So scarcity and demand, I should say. But then the downside of that, the counter to that is if you have full price symmetry or information symmetry, then you have a lot of volatility. And that's where stablecoins came in. Because then people had the idea, if you have this very volatile asset that people don't want to get into positions because it's illiquid, why not have it pegged to a stable fiat, and generally the USD? So it had the pro of reducing the volatility. So from that perspective, it really worked. It increased liquidity. It opened up options for, bridges, swaps, and other kind of decentralized finance instruments. But it still didn't fix the problem with the regulatory aspect. And to my mind, a stable coin actually takes a risk-free currency like a fiat and actually introduces credit risk on the part of the issuer. Because just because you have something pegged to a fiat currency doesn't mean that the issuer has the ready fiat currency if and when you want to exit your positions. So I think, in a way, it also introduces the risk of a shadow currency if you have low trust in the government or there's other kinds of instability. But I think exactly as you said, Mr. Kwame, what the CBDC does is it provides you a dematerialized digital version of fiat. So it has all the same properties. I guess this is more a question for the regulator, whether you would consider it a bearer instrument or not. Sweden doesn't, I believe. But I think, in a way, CBDC is kind of the next evolution and not necessarily the final one, but it also provides the most options with the least downside. So what do they all have in common? They require some kind of blockchain or distributed technology, but it comes down to the capabilities which form the differentiation, I would say.
Thank you. So what are some of the use cases that you are seeing that makes it interesting, whether it's stablecoin, crypto, or CBDC, especially for Ghana and for an economy in general?
Well, that's a trick question. So let's just say, assuming I was looking into crypto. I think stablecoin has shown some value in cross-border settlement. It seems to have really addressed a bit of a pain point, but I also think it's motivated the traditional institutions such as SWIFT to start looking at blockchain. And it's phenomenal to see that the World Bank, I think sometime in 2017, I can't remember when now, did its own internal study and realized there was a significant savings it would make if it switched to blockchain. If you look at, I think SWIFT has publicly announced their experimentation as well. So there's that. And then you also have other use cases. One of the things that attracts honest users to crypto today is the simplicity in the user experience. That cannot be underestimated. Have you tried sending money through the traditional system to buyers and suppliers somewhere else? Perhaps not for a large transaction. So I think those are the kinds of things that sometimes draw people into crypto, and it's legitimate desire. That's a problem that regulators have to deal with, have to figure out how you approach. Now you also look at, I'm particularly excited about Web3 and the amazing opportunities it creates. I was listening to Polygon this morning and hearing what they are doing and what they are enabling, for instance. Because locally, we're aware of several fintech startups who are enabling different products and services based on Web3. And there are some internal conversations we're having with our counterparts in Singapore, for instance, to leverage that in our business and border project. I don't know if you're familiar with that, but we're building a financial trust corridor between Ghana and Singapore to facilitate trade between SMEs on both sides. So that's an example of an application. But maybe let me spend a bit more time with CBDC, which is what I'm officially allowed to speak about. CBDC, at least the use cases we've seen so far, really comes down to the usual peer-to-peer merchant payment in Ghana. Merchant payments was a big challenge. We haven't seen as much success in merchant payment as we've seen with the other use cases. Local remittances, bill payments, etc., is doing quite well. We still have a problem with merchant payments. And it's not entirely a pricing matter or a product use case matter or user experience matter. It's a combination of things, and it's an inefficiency problem. And so we've seen a scenario where CBDC could potentially greatly enhance the cost economics of running transactions in the markets. I mean, think of it this way. CBDC, at least, the model that we're running, is a token-based CBDC. Now, that means, just like today we print money, and we make it available distribute through commercial banks, and you have it in your bank accounts and ATMs, we're going to do the same. Then licensed entities and fintechs and banks and SDIs and everyone else, mobile money operators, can plug into it and build their own innovation. So if you're a fintech, you now can very easily not have to wait for a very long integration roadmap with one player or the other just so you can get an integration. Build products on your own that will be interoperable in this market. That's an example. So really, when you look at the use cases today that are being enabled, they are very basic use cases to prove a concept. Can it work in an environment like this? But beyond that, the additional use cases that we expect to see would actually come from industry. And that's why we have a sandbox in place going forward and all these things to be able to test what you also have. And if you look, there's obviously the cross-border conversation. Just want to make a point that it's also something that we see CBDC being a solution to, but we are not directly testing that now. We believe we need to be part of a broader effort to build a framework. These things are not technology, the limitations were not technology-based. It's rule-based, it's legal issues, it's compliance issues. There was never really a technology roadblock to it. So it's interesting when I hear a fintech telling me I've solved a problem, and they're just showing me a platform connects one place to the other. That was not the problem. The problem was perhaps a regulator there or here says you can't do this because we have these AML concerns, CFT concerns, or any other concerns. When you solve that, now you've innovated. So when it comes to the use cases, what we've prioritized, at least in our pilots, in a place called Sefri Asafo, we had an announcement about that. We actually saw, perhaps at the individual transaction level, a bit more success than we have seen if we do the transaction per user sort of assessment of even the mobile money space. And so that gave us a bit of an encouragement. And in our pilot, we had Express Pay, we had IT Consortium, we had Cal Bank, we had Fidelity Bank, and we have Vodafone Cash, just to make a point. So you didn't see any Bank of Ghana app on the market, right? It was on purpose. Apps are easy to build. But it was on purpose to emphasize the fact that we expect the service provision layer to come from you, not us. And the use cases that will be, will spin off from there will come from you because you're working closely with consumers. We work with licensed entities, so we know you more than we know consumers to a large extent in terms of user experience preferences and all these. That's the idea. So the use cases that we actually see, I think will be exponentially more. But right now we're just testing and trying to see things like merchant payments, peer-to-peer transactions, potentially cross-border, which we're seeing from Project Kuka and Project Dunbar, and the basic that are in place already. But actually, this is something that we want to see the innovation community introduce and implement if and when Bank of Ghana is to introduce a central bank digital currency full-time.
Sounds good, thank you. What about you, Viv? What are you seeing in the market? I know this is probably your first time in Ghana, but I think you probably have a broader view as well.
First time in Ghana and loving it, but I am very familiar with the region. I was born in Nigeria and I've worked out there for a bit, so I'm well familiar with it. If I'm allowed one off-the-cuff comment, I'd say the use case I'm most excited by is the one we haven't seen yet. And I keep thinking, and those who've heard me speak before, I keep banging the M-Pesa drum. They came about when Safaricom realized that people were using phone credits as a form of exchange of transfer. And the only way they were able to see this was because they had robust systems that gave them visibility. So from again, if I can come back to the characteristics of what would make a good ecosystem, and then correspondingly, to your point, which I completely agree with. The service provision layer needs to come from the SMEs in the community. I think it'll come down to the discovery piece, understanding the user's requirements, not from the perspective of what you think they want, but what is their behavior telling you rather than their words. So another thing that we've focused on quite heavily in the HBAR Foundation and Hedera as a whole is the sustainability piece. So we're the only DLT out there that's in production that is not just carbon neutral, it's actually carbon negative. So we buy offsets to make sure that for any transaction that goes through, we're actually carbon negative. So I was speaking earlier with the team from Realist, and that, I think, is a beautiful use case because it hits the entire ecosystem in many ways. So I'm not sure if I'm allowed to. Actually, I am, because I've already pitched, so we're good. It's about getting leased land for growing bamboo, which is very good at taking carbon dioxide out of the environment. The people who are going to be growing the bamboo are going to be small-scale farmers who are empowered using NFTs. Now, in order to, with the carbon that's actually being calculated as being taken out of the environment, this will be picked up by IoT devices. Now, how do you regulate all of this, and how do you make sure all this goes on to, that is verifiable in the long term? So this is where DLT has a really good fit, because it gives you this provenance and the verifiability. So if you bring all this together, you're hitting on multiple aspects of real-world challenges: the environment, empowerment, the farmers who have NFTs in order to be able to work parcels of the land, they get the upside of this in the form of cryptocurrencies or whatever the case may be. And the team from Realist, if I'm not being honest with your use case, do please pull me up. But I think something that hits and solves a whole lot of problems simultaneously across different layers should be the sort of foundation of what constitutes a good use case, in my opinion. Because the technology is never the problem. And if you think of what the composition of DLTs today, some of the components in there are like 50 plus years old. The notion of distributed systems goes back to code breaking during the Second World War, which was 70 odd years ago. So I think it's not what the technology is, but what it's used for and how it's used as a tool that will make the difference.
Thank you. So this is actually a very, very interesting use case, and I know a lot of emerging markets and developing markets are looking at ways to tap into new technology to address chronicle and historical problems. I think it's a very interesting one. But with innovations like this, there's also risk, right? As a regulator, how do you look at risk in this space versus opportunities? And I think there's a difference between looking at risk and opportunities versus balancing innovation and regulation. So let's start with, how do you think about risk versus the opportunities that you very well communicated?
So this is a very interesting one. I think it leads to that whole balancing innovation and regulation. Because the risk and opportunities, that forms the basis for which you even consider engaging to help support some kind of innovation. But it also comes down to really understanding what those risks are. And when I say understanding what it is, moving beyond perception of risk to the actual risk. And this is where I think most central banks that have tried to put in place a sandbox are doing the innovation community a good service. Because if I am to view something and assess it for its risks, no matter how professional I am, you cannot eliminate the sum total of my personal experience from education, experience, everything else. What is the actual risk in it? That's where tools like the sandbox help identify it for what it is and what it's not. When it comes to the opportunity part, I think, our problems are quite simple out here. And I was actually happy to hear the example that Viv gave about the bamboo production and plantation. Perhaps that's happening somewhere in Ghana as well, if not.
It is in Ghana.
It's happening here. Then, of course, I need to meet realists, please. This goes to the core of that conversation about responsibility and social responsibility. But what is the opportunity? There are several times where, I think some of you may attest, you've taken innovation to a central bank somewhere, or you're trying to deploy a certain service, and they think that service addresses a problem they have, for which reason, before you realize, they are somewhat of a partner in trying to promote the product or service you have before them. It is no different with us. There are times we see certain gaps on the market where we know we need service providers in that category. Or perhaps a fintech comes for an application, and where's their focus? A certain part of the country, perhaps everyone in this room is not paying attention to. Suddenly, that's our priority. There's an opportunity to create, not just setting up there, creating opportunity for the youth over there to be able to demonstrate their creative potential as well, and the creation of employment and income, etc., but they're probably solving local problems there. At that point in time, no matter where you are along the chain, you have some form of incentive to help promote that. And if you have concerns about, and this comes to the issue of risk, if you have concerns about it, and you're a regulator, you have to have concerns. Where there are concerns, we try to work with them to fix it. Now, unless you don't want to fix it or you don't want to agree with us, then that's a different matter. But if you're willing to cooperate, there are several entities that, when the new law was passed, if you had looked at their profile and their sum of activities, potentially you would think we wouldn't even let them through our doors. We work with them, they open the kimono, we work with them, structured them well enough to be compliant, and they're out there operating, and we do our on-site inspections and all the other regulatory stuff, supervision stuff, and it's fine. That's an example of looking at the risk and the opportunities, and I think to a large extent people miss this. That engagement helps us understand. And also I think the opportunities are missed sometimes because the innovators themselves speak a different language from the regulators. There are times I'll be on calls with my team and I know what the innovator is talking about, but the words they are using, the terms they are using, they are just raising red flags back to back. You're using terms that are designated for banks if you don't have a banking license. You can describe it differently. Don't use that technical terminology. So I'm really making a point about the communication barrier between us in terms of even understanding the true opportunities and the risk. And please, if your product gives convenience to people like, people in this room, be clear about that. Be comfortable with that. It may not be our priority, but don't try to pitch it as financial inclusion because it's not. And if it is financial inclusion related, if it's solving problems, that is a big opportunity. And I think for those of you who have seen our Sandbox press release, we've been clear on the different areas that we're interested in, which includes also, if there are any women in tech, please, we're not seeing enough of you. We often try to extend some expedited courtesies to you. We're not seeing enough coming through the pipeline. But just generally, if we're seeing, we consistently highlight what our priorities are as a central bank, financial inclusion and all these other issues driving a cash-light agenda. If you have solutions that address that, be clear to the extent possible and dialogue with us to help us understand it. Now, you don't need to worry as much about the product or your communication because there's going to be a sandbox that you can utilize. But this is, for me, from a balancing of risk and opportunity perspective, this is it. If the risk so far outweighs the benefits, look, it's a simple judgment. What is the point, right? Is this really worth it? But if the benefits outweigh the risk, how do we solve that problem? As Viv mentioned, we all know the story of M-Pesa and how it's cascaded all the way through this continent now. There were similar concerns here. So our initial guideline, branchless banking guideline, says the banks can do this, the telecom companies, be their technology partner, or perhaps their agent network support, and that's it. But as we saw how things evolved, we evolved as well, and that's how we are where we are. And that engagement, this is how it deals. So really, I think it really comes down to balancing it to understand what is beneficial and whether it outweighs the risk. And that's how not just Central Bank of here in Ghana, but I think on the continent is also handling it.
Thank you. Viv, any comments?
completely agree with that, actually, because risk in and of itself is not bad. So it's just how do you mitigate it, how do you detect it, and how do you regulate for it? And I guess, from my perspective, having had to work with regulators in the past in insurance and and capital markets, my general feeling is hug the regulator as early as possible, because there's a good chance they're going to hug you back. Now, I think on a more serious note, though, the notion of regulation and compliance with regulation isn't actually a point, it's more of a spectrum. And this comes back to the actual trade-offs. So from the opportunities perspective, I think, if you look at, a somewhat oversimplified role of the regulator, it's to bring confidence in markets, protect your consumers, and, stability. So how can you allow a market to function if any of these are sort of compromised? And I think the risks will always be there, both for going with a CBDC or not, because if you don't, and it's only stable coins or other forms of cash only, that doesn't have a lot of visibility into it, then you potentially have the risk of sort of shadow currencies or shadow economies. The black market has been flourishing for, millennia. You run those risks. But then again, from the opportunities perspective, I think it actually comes down to, again, the notion of utility. So from an individual's perspective, I'm going to tread carefully on the unbanked side of things. I think one of the earlier speakers mentioned that, this notion of DLT and decentralization and disruption solving problems for the unbanked is a bit of a fallacy, because it's only solving problems from the middle tier and upwards. Because if you think about what we consider decentralized cryptocurrency, even to get any Bitcoin, you still need to have fiat. You still need to have a centralized identity that was issued to you by a recognized authority. You then need to go into a centralized exchange. You then need to provide all this information, and there's a centralized decision made as to whether you will get access to this platform or not. Then you need money that has been verified that you've earned it in some digital form before you can actually buy the cryptocurrency. So in this entire end goal of getting this cryptocurrency that allows you to operate in a decentralized manner, you've gone through multiple centralized steps. So I think this notion of utility needs to be looked at in the context of, does it simplify, does it save time, does it save effort, and does it simplify something? So I think the opportunities here are around allowing communities and more granular levels of society to actually self-form and come up with new business models. And I think that is where you're going to see, and this sort of comes back to my previous off-the-cuff comment, that I think the best use cases are the ones we haven't seen yet. Because if they can self-form, self-regulate, and understand what a real tangible problem is, and then have the tools within a regulated framework which gives the trust, the guarantees, and the consumer protection within which to operate and try and solve this problem, people will step up. And, I can't think of any concrete examples from this region off the top of my head, but, you've seen, like in Bangladesh, and I'm afraid the name evades me, but it was basically a collection of matriarchs who came together to put together a system of contributions within the village from the takings, and this provided things like funeral cover, crop loss cover, and things that were meaningful to the community, and it sort of self-formed. Now, I think the other thing as well is when you have good regulation, the opportunity it also creates is a lower cost of service delivery. Because in a way, you don't have people taking shortcuts, you're working within the frameworks, and the service providers have more confidence to go out there and take risks on what's going to be in their future product roadmap. So I think it does open up a growth mindset for society as a whole. Now, from the government perspective, I think it removes a lot of the red tape that in turn contributes to the virtuous circle of unlocking a growth mindset within the community as a whole, because you could have automated payments, for one. You have significantly higher taxation opportunities because you can actually see the flow of liquidity, whereas if you think of the traditional cash economies, you can't really tax what you can't see is flowing. And that's kind of part of it. Now, what the regulator would bring in is access to recourse in case you need to sort of roll back transactions that weren't quite the level of service or whatever the case might be. And if you don't have this, it sort of puts the brakes on that level of growth or that lower level of transacting. So I think if I were to sum it up, I would say hug the regulator, allow the growth mindset, and then provide the tools. In terms of risk, though, there's all this talk about disruption and all this sort of thing, but I think disruption flies in the face of growth, because if you disrupt the financial markets or the capital markets or the money markets for that matter too much, you cause instability, which is going to reduce trust. People aren't going to be that confident or willing to transact at this point. So you're actually, in a way, stalling growth. So I think, again, it's a spectrum rather than a point, and how to navigate that falls on the shoulders of you, Kwame.
I think it's a great segue, and maybe you can have the last word, and then we'll open it up for a couple of questions. But the balance between regulation and innovation really touches on a few points, and some of them are contradictory, some of them are controversial. The walkthrough of started with Bitcoin. It was totally decentralized, and then it became more and more centralized as far as you getting onboarded with your ID now and going through exchanges to get liquidity, because not enough adoption for you to do purely peer-to-peer. And little by little, I think, a crypto purist or a crypto industry that fell in love with the idea of Bitcoin at the beginning might say, well, it's regulation's fault, right? That it became so centralized. But it's not really, because some of it is totally unregulated, but it's really kind of a business model that turned out to prove out that you do need decision makers along the way. You do need trusted institutions to do certain things that peer-to-peer and individuals won't do when it comes to validating your ID and providing liquidity and putting capital in place. So it is a balance a bit with the disillusion of purely decentralized application, but also capturing the innovation with regulation. So I'll give you the last word on this. How do you balance that? I don't envy your job.
So I think this, I recently saw that the US government had released a paper making some recommendations as to how to deal with virtual assets and digital assets.
Yeah.
This was to be expected. So I think sometimes we're under the impression that someone has figured it out. No one has, right? Because think of the fact that fundamentally, Bitcoin was created for a purpose. And that purpose did not necessarily include being the closest friends to central banks. And so the inherent design was to be able to circumvent the role and influence of a central bank or a central banking function. And that's understandable. Then you take a step further, I think, to the point that you made. So you're right, there are some crypto purists who actually believe that how do we build something, or how have we built something that is intended to be decentralized, and today you need centralized platforms to access it, to be able to operate on it. That's a bit of a conflict right there. So that's even at the industry level, you're already seeing that. Then now, for instance, we've been looking into the issue of decentralized autonomous organizations. Really great concept, really great idea. But I think if you also look at how it's potentially going to evolve, it's a bit of a wait and see in our view, because there are several aspects that need to be down the line we can see evolving to create similar conflict and tension. But it's, at this stage, a very great idea. At every step of the way, including the fact that there was even an evolution to introduce stable coins. Why? I'm sure Satoshi Nakamoto would not like the idea of a stable coin if we were to know who he is and ask him if it's a he. Because it really, again, is a bit of a conflict there. We're no different. We're now in a position where you look at NFTs, however you feel about them, it's a great concept. You look at in fact, kids under 12 right now are living in a virtual world. In case you may not have noticed, if you have some of your own, they live in there full time. and they keep asking their parents for tokens. And those parents work in different places, perhaps some even in the central bank. So it's unavoidable. You hear and see these things. This is becoming increasingly something that is popular. But then, as you see some of these interesting dimensions, you also see the other attendant risks. The usual stuff that are highlighted, right? Even including the issue sometimes with, take something like ICOs. In these initial coin offerings, for you who are potentially looking to invest, is there enough disclosures for your benefit? These are things that, for your protection, if we are to regulate, we need to make sure that those things are addressed. And this really, is an example of the responsibility that lies on the central bank. So every regulatory function in every jurisdiction has to now define, beyond the interesting tech, beyond the interesting concept, beyond the possibilities that the combination of digital assets and DLTs can provide, how do you ensure your fundamental principles are still strong? Protecting consumers, ensuring stability, making sure your monetary policy is not negatively impacted by potentially a parallel currency or shadow currency in your country. These are things that we have to assure for the broader industry. My encouragement has always been, whatever jurisdiction you're coming from, and as he said, I like that description, by the way, hug your regulator and they might hug back. Most likely. It depends on the market, please. So I cannot tell for certain, but what I have seen, even in the case of Bank of Ghana, I think some of you may know Ghana.com, Professor Nidako. He's been with Bank of Ghana right from the start, even holding trainings and inviting Bank of Ghana. And when they have workshops or their conferences, Bank of Ghana has to speak. And we feel obligated to speak because he hugged us first and now we have to hug back. That's exactly the reality. And often the goals that you seek to achieve, but potentially there are solutions not in place today. You may have to invest in co-creating those solutions with regulators across the continent. It's in your interest. Other industries have done this over the years. Unless, of course, you want to leave central banks with the one tool they have, prohibit and cut you off the payment system, and it becomes a cat and mouse game. It's an easier chase, by the way, and then they don't have to worry about anything. But that's not what anyone is seeking. How do we all benefit from the best in innovation to solve society's problems, to be useful for all of us? And so this is where I'll encourage every one of you, as my last word, to collaborate, to engage, to expose a bit more, not just perhaps to central banks, to even law enforcement agencies. Because they also freak out when they hear about these things, because now they have the burden of trying to be involved when it comes to money laundering and these issues, fraud. Engage, expose, educate. It's in your interest if you're going to have the freedom and the space to grow. But as of right now, that gap still remains. And it's a legitimate gap. You have your legitimate interest, but so do they. And that's our reality. Thank you very much.
So we know now the Bank of Ghana likes hugs, so we can all just offer some. We might get some back. Okay, so we'll open it up for questions. Thank you so much. Go ahead. I saw this hand first.
Yeah, my question is for Mr. Kwame. I want us to probably look at that cryptocurrency question again. We know that. Please? Okay. Okay. There are risks associated with cryptocurrencies, of course, from the central bank perspective. Yes. But at the same time, I believe that we may need to manage those risks. Some countries that have banned cryptocurrencies, we're seeing that, particularly in Nigeria, for instance, that controls over 30% of traders, cryptocurrency traders in the world. You still see these things happening despite the ban. So would it not be better if these things come under regulation, unbanned, so you can manage the risks in those countries? I'm just wondering why the central banks are shying away from regulating, despite the fact that these things are still happening in the market. That's my question to you. Wouldn't it be better for you to regulate than to just look away?
Thank you very much. It's a very interesting question. I wish it were that simple. When you start regulating something, so let me give you an example. When we issue a license to a bank, that means something. We're giving the public an assurance that is a safe institution to do business with. And that's why when any risk crystallizes, whether it's a payment service provider who's licensed or a bank, it is our ultimate burden. Now, it's a great idea to say regulate them. The question I have for you is how, right? And it's not just how in terms of approach, but how in terms of being able to give a certain level of confidence and protection for something that is akin to an ideology, if I should say, right? I just want to highlight to that level. There's also the theory that, look, let's face it, society at some point in time had a problem with alcohol, a problem with tobacco, and several other things. I mean, you could even stretch it to firearms, etc. And eventually, they found a way to deal with it, to live with it, by managing some of the risks, right? I think what you see happening now is a bit of a creative dynamics going on from the regulatory standpoint. And again, this is not just a Ghana matter. This is globally. But the one thing no central bank likes is until they have been able to put that safe guardrails in place, when you make their capacity to ensure consumer protection and sector stability, when you try to put that at risk, they have a very, very different view of it. This is really the truth of why you see some of these strong actions coming. And I assure you, even in this market, it has taken a lot of restraint for us not to take certain actions because it's much easier. So much easier. Just one notice saying, it's okay. We said it's not regulated yet, and just stay away from the payment. You know today our regulatory position is, don't utilize the payment system, so don't connect to banks, PSPs, etc. We're doing mystery shopping. We're trying your product and services. You'll be surprised how many of your products actually have actual BOG Fintech office staff using it. And part of your groups who are on Telegram with you, we're all sharing our thoughts. That's the reality. We see it, we know it. Even when you think you're evading, we see it. But you see, the Fintech office has a bit of a different mandate within the central bank. In addition to our stick, we also have a bit of a carrot. We're allowed to promote innovation. But we also have to be responsible to balance the two. This is what Fintech offices do. So when Supendu is speaking sometimes, you can't tell whether he's a Fintech or he's a... I have to balance mine more carefully because we're not Singapore. But the question you have to ask yourself is, can we today, is there any market that is sufficiently regulating cryptocurrency as they could or as they should from the broader market perspective? So not just people in this room and people who think in the same light, but for everybody else, what do they deem safe enough for you to say it is fine for this to be on the market? Here is the process for licensing. Here's what you need to do, and here's a guideline. We've seen several, but I think right now what I'm seeing in our engagement with our colleagues, what we're seeing is we're all coming around certain consensus. It starts with an approach, right? Engagement, one. To understand what it is and what it's not, because I can assure you sometimes when you hear the conversations, it's not really about some of these interesting innovations that is bringing transparency and potentially even helping government across the continent see better and be able to reduce fraud and improve tax collection. That's not what is being discussed. Everything that is being discussed, I'm sure you can imagine, is the dangerous end of doomsday scenario. That's what's being peddled often. How do you address it? And I think the consensus starts with the approach. One, engaging. Two, being able to even categorize, right? Because not every token is a dangerous token. We may not want you to use it in the payment system until we think it's okay, or perhaps we may never think it's okay. But at least there are still NFTs, and there are some others. Tokens of attestation, really. Should that be prohibited? Not quite. Not at all, if you ask me. But it's a classification matter. Then the question is, how do you separate the ones you don't care about, you don't worry about, the risks are quite low, from the ones that have the legitimate risk from your mandate standpoint? Now, that's where everyone is trying to figure out. Don't get it wrong. There are some markets that prohibited it and then came back and turned around, and then now they're taxing it at 30% plus. There's also that. But I mean, if you're being taxed at 30, 40, and 50%, where is the business? I'm not sure you'd be in business anymore. And we don't think that's a way of driving innovation either, by killing it before it actually starts. And so the question really comes down to, how do you solve that problem of having sufficient guardrails in order to say, it's okay now, we can regulate it. Look at nuclear energy and so many other things that society has now gotten comfortable with. There are some countries, even in Ghana, we had an active nuclear power program at Ghana Atomic Energy somewhere around, I think it's Hachu, or somewhere around that side of town. At a time in our history where we had the capacity, the resources, and the rest. Now we don't get near things like that. But there are other markets that are actively and comfortably running their countries on nuclear power. So the question is, back to that point that I made, to make sure you can give the market confidence in saying you're regulating it, what are the protections in place, and do you have the true capacity? Do you have the, not just at a central bank level, by the way, and I like what they said in the US document, an all-government approach. That means all the law enforcement agencies and all the, the judiciary and everybody else has to play a role in this. So that's probably a question back to you as to how we solve it.
Okay.
Thank you.
Okay, thank you. I'm going to let
Thank
the
you.
moderator allow me to ask one very important question. I know we're running out of time, but on behalf of all crypto purists who have been talking about the leaked documents about CBDCs and programmable money, how can you ensure people or debunk, if it is wrong, the assumption that CBDC is programmable money that will, quote unquote, remove the freedom from the masses and lead to issues, as we've seen, for example, in China recently with the vaccine, or again during the war in Ukraine and Russia, where Russians were arbitrarily removed from the system, their Visa cards not working anymore, and all of that. How do you explain that CBDC doesn't encourage that kind of move where it's programmable money? If somebody is not adhering to something, then they don't have access to their money again. How can you debunk or explain this?
Thank you very much. And
60 seconds.
Was that?
60 seconds.
Some of you may actually look at this and wonder, or listen to this and wonder, but it's actually something we've been hearing quite a bit. I was surprised to hear about it, leading the CBDC initiative. This is never something that has even crossed any of the discussions, but hey, it is a reality of what people may feel. First of all, if that is a possibility in your country, CBDC is not required for that risk to prevail on you. That's the truth. The kind of controls China has in its borders, and sometimes even outside its borders, does not require CBDC. If you're in a country where your individual liberties are enshrined in law, whether CBDC or anything else, the government cannot really take those liberties away. So that's the first thing we have to understand. And in Ghana, at least the CBDC that we are looking at introducing, or what we piloted, is not an account-based CBDC. So we don't even know what transactions you did as an individual. We only see aggregate transactions. What business do we have today when we print money? We don't know what you spent where. But of course, if you're involved in any crime, your service provider will let us know. Law enforcement will intervene, and they can find that information. And that is a necessary part to make sure society is orderly. But in terms of social control and programmable money, the programmability comes from you, not us. Because remember, we're not even making the notes. So in our case, we don't want the notes to be programmable. We want the wallets to be programmable. Who issues the wallets? You, the banks, you, the fintechs, you, the mobile money service providers, etc. So perhaps you are the ones we should be watching for trying to do social control, right? We don't get involved in that stuff. So you can determine, for instance, we're paying farmers in this part of the country We don't want them to use, we don't want them to use the funds to buy alcohol and marry a third wife. We want them to use the money to buy implements, inputs, etc. from Yara, Wenko, and these suppliers. Therefore, they are the only merchants from whom they can transact. That's something between you and your clients. So we don't get involved in that stuff at all. And so I hope that at least allays the fears of those who may have some concerns. Thank you.
That answers it. Thank you very much. So before you leave the stage, I had a word that the panel, so you and Viv had a question for Samuel Odoy-Larayai but on the Realest Token project. Is that the case?
Well, I was interested in meeting them.
Ah, fantastic. So I think they are in the room over here. Yeah. So you might be able to have a conversation with them right about
I think
now.
you're getting a hug today.
Thank you so much. A round of applause.
Thank you very much.
Thank you, Camille. Carmelle.